everyone, Zishan here from Royal LePage Signature, and this is the Market Minute for October 2024. In this video, we're going to do a quick comparison year over year across the GTA, Toronto, and New York region. We're going to look at sales, listings, months of inventory, and price. We're going to jump right into sales. We finally have some good news in the GTA real estate market. Sales jumped year over year about 44%. We went from 4,600 sales last year to about 6,600 sales this year. In Toronto, we saw a 37% increase in sales, from 1,836 to just over 2,500. And in New York region, we saw a similar 37% increase in sales year over year. Now, the key takeaway here is that sales is the leading indicator for the market. As sales go, prices will follow. There will be a bit of time, there will be a bit of a lag, but as sales start to rise, prices will follow soon behind. With respect to our inventory was up year over year. We went from about 19,500 listings last year to 24,481 this year. That's a 25% increase in listings or in inventory. In Toronto, we saw a 23% increase. We went from just under 8,000 to just over 9,700 units available for sale. And in New York region, we went from just under 3,500 units available for sale to just under 4,700, which represented a 35% increase in sales. What we have to see, or we have to notice here, is that this is the first time in a long time where sales growth is outstripping or outpacing the growth in inventory. So that is going to mean we're going to have a tighter market going forward. Months of inventory, you can see it's reflected here. If you remember, last month we had over 5 months of inventory. And just as a recap, over 5 months of inventory means it's a buyer's market. Around 4 months means it's a balanced market. And then under 3 months is more of a seller's market. So you can see last month we had over 5 months of inventory. And with the shifting market, we can see that the months of inventory went down to 3.68 months. That's a significant drop in a very short amount of time, just month over month. From year over year, we can see that we were over 4 months last year, and now we're 3.68. That's across the GTA. And in Toronto, we went from 4.3 to 3.89. Again, we can see months of inventory is shrinking, and New York region still pretty flat, very similar year over year. As we know, as the months of inventory goes down, that means our market will start to tighten up. That's usually a predecessor to prices starting to rise. With respect to prices across the GTA, very stable year over year, 1% increase. It's essentially a rounding error, but this number represents stability in our market. In Toronto, we saw a 3% increase, 3.37% year over year. And in New York region, we went just again a 1.3% increase in price year over year. So stable markets. And you might be wondering, well, why haven't prices started to rise yet, given that interest rates have gone down and sales have started to go up? Sales is a leading indicator. There will be a lag with prices starting to rise. It's going to take some time for the market to absorb the information. It's going to take some time for the inventory that we have to be absorbed. If you look at this and you sort of zoom out, the 24,000 listings that we have available for sale, that's a 300% to 400% increase in what we had at the peak of our market in 2022. So we've got a lot more inventory than we're used to having. But as that number starts to shrink and as these sales start to go up, you will start to see prices rise. At this point, it's an indicator for our market. It's not a trend yet. We'll have to see what happens month over month. But the indicator looks like it's heading in a positive direction. If you are a buyer, this is a really good time to get off the fence and get into the market. Inventory is still high. There's not so much upward pressure on pricing because we've got a lot of choice. But the sales, you can see people are starting to come off the fence with these interest rate decreases. And you're going to see another one in December. We're going to go 50 to 100 basis points further down per the Bank of Canada. So this market will start to shift as we go forward. If you're a seller, depending on the pocket that you're in and how much inventory is there, you may want to hold off selling until the spring. If you're buying and selling at the same time, it's usually a bit of a wash. But if you're in a market where there's still a lot of inventory or in a pocket where there's still a lot of inventory, again, maybe hold on tight if you can. If you have any questions about this video or these numbers, please, as always, feel free to contact me, 416-450-3163. Thank you so much for taking the time to watch this video.